This program was made possible by the law firm of Zalman and Schnorman, whose practice is limited to personal injury and insurance law. Welcome to Lawline with your host, Alan Schnorman. Mr. Schnorman is a distinguished trial attorney, author, and lecturer. Each week, Lawline will bring you the most knowledgeable experts in the field of law today. And now, we introduce our guests and our host, Alan Schnorman.
Welcome to Lawline. No matter who you are or what you do for a living, a call from the Internal Revenue Service usually provokes the same reaction: fear and dread. Today we'll find out who becomes the target of the IRS and what to do if you are under investigation. Our guests are Gerald Levy, former supervisor of the Criminal Investigation Unit of the IRS Brooklyn Unit, and Ben Brofman, a noted criminal defense attorney who represents, among other people, individuals who are accused of tax fraud. Hello, Jerry. Hello, Ben.
Hi.
Okay, Ben, Jerry, what is a special agent of the IRS?
There are three types of field people in the IRS. A revenue officer who collects delinquent taxes, a revenue agent who audits the general returns, and a special agent who does criminal investigations.
Now, how do I know if the agent who's coming to me is looking at me for criminal aspects as opposed to me sending him back money?
Because he has to identify himself, and he has different type of credentials than a regular revenue agent. He has a badge, and he must tell you that he's a special agent from the Criminal Investigation Division.
Does he also carry a weapon?
He certainly does.
Ben, what happens, what's your advice to people who, if all of a sudden somebody comes to their door and says, I'm a special agent from the Internal Revenue Service, what should they do?
It's nice to meet you. I'd like to speak to my attorney and have him get back to you. I think the biggest mistake that the average taxpayer makes when he or she meets a special agent of the IRS is to have a conversation, because either you will inadvertently incriminate yourself, perhaps, or you will try to make it go away by saying something which is not true. And what the general public does not know is that if you make a statement to a special agent of the IRS, even if it's not under oath, if it is a false statement, that can subject you to federal criminal prosecution, even if they find nothing wrong with your tax returns after the audit is over. So my advice is, do not engage in the conversation. You have no obligation to answer their questions, and it's best to seek counsel, because if a special agent shows up, you are at a stage where you are generally either the subject or a target of a criminal investigation. This is not a friendly chat. This is not a hello, I'm from the IRS, I just want to know if you've really given these charitable contributions. Special agents get there when a criminal investigation is underway.
Jerry, at what point does an investigation go from civil, where you're looking to recoup some monies perhaps, to criminal, where you actually can put the taxpayer away?
Well, that's a tough question. There was a time, and the procedures, not the procedures, but the way IRS worked has evolved over the years. There was a time when most investigations originated first out of an audit. And then when the auditor, looking at the records, determined that there was indications of fraud, the case would be transferred to a criminal investigator. Now, much more of the work of the Criminal Investigation Division, they originate from their own work. Either they're in cooperation with other law enforcement agencies who indicate to them that here's a person who bears criminal investigation, or in conjunction with the U.S. Attorney's Office, who asks the IRS to send agents to participate in a grand jury that he may be doing, or work that the IRS special agent may develop on his own, either through informants or through active attempts to develop cases.
Well, if the IRS gets an anonymous phone call that this restaurant is really making more money than they're reporting, is that followed up?
Some of the information that comes in anonymously will be followed up. As any good law enforcement officer, he's more concerned with the validity of the facts. If you tell him my neighbor's a tax crook, that's not a very high probative value. If you tell him my neighbor is a tax crook, and here's where he gets the money, he has this secret business, and he diverts money from that business to a secret account, that type of information, the more profound information is more likely to get scrutiny than just a one-liner, let's
I
say.
assume you also get calls from spouses who are estranged?
Absolutely.
It's a big
Anybody?
I'm sorry, it's a big part of tax fraud is disgruntled employees, ex-spouses, matrimonial actions that turn into acrimonious disputes. I mean, I'm in a number of criminal cases during the past years where the impetus for the investigation came from a disgruntled employee, bookkeeper who wasn't happy with the bonus, who got fired, a secretary who had a relationship with the boss and didn't work out and was angry. It's a big part of the IRS's work.
Now, Ben, you're an attorney. When you talk to your client, that's confidential, and you can't repeat it to anyone.
That's
a
correct.
court of law and the subpoena or anything what that client tells you. What about an accountant?
Well, an accountant and a client does not have a privilege that the government recognizes. Accountants are just about the top witness in most tax fraud cases, because accountants, unless they're participants in the tax fraud, end up getting immunity in return for their cooperation. But what you can do, what I can do when I do an investigation, is I can hire an accountant to help me examine the taxpayer's books, and that relationship becomes privileged. But the average accountant who works for a taxpayer gets a subpoena from the IRS. You're looking at number one witness for the government.
So what you're saying is, Jerry, correct me if I'm wrong, the accountant who's done your return for years, who perhaps even helped you or advised you how best to limit your tax exposure, now becomes the lead witness against you?
In fact, it sort of becomes an adversarial situation between the client and the accountant. Because if, let's say, for instance, the return is false, there's a fraudulent return, well, one of two people caused that to happen. The accountant, on the one hand, because he's the one who physically prepared it, or the taxpayer who didn't tell the accountant everything. The accountant, when suddenly the investigation starts, he doesn't want to be a criminal. He's going to say, I prepare the return based on the information provided by the taxpayer. The taxpayer, on the other hand, says, he's the professional, he's the guy I depend on to prepare the return.
So the old excuse, the accountant, I just took my accountant's advice, I did what he said, or she said, is what, Ben?
Sometimes it's a very good defense. Sometimes it's a preposterous defense. And one thing I will tell you, if you're going to do something bad in your business, and I don't recommend that you do, and I recommend that you follow the law, but if you do have some adventure ongoing in your industry, don't involve your accountant, because in every case that I've ever been in, the accountants are the first to say, I give up, I did nothing wrong, he's the bad guy.
Jerry, isn't that what happened with Leona Helmsley, who actually went to jail for some sort of tax evasion where the accountants said something different than she did?
Absolutely. And I mean, it's always, a tax case is a lot of paper. The witnesses usually are the verifiers of documents. Unlike many cases where there's a parade of 20 witnesses, all who, let's say in a drug case, all who participated. In a tax case, many of the witnesses are bankers, real estate brokers, car salesmen, people who have no axe to grind. The one person who's a little closer than that, who's usually a witness in a tax case, is the accountant, because he was in contact on a more personal basis with the taxpayer, as all these people are third parties.
Now, Ben, I know you represent reputed organized crime figures. Are you finding more and more today that they're being charged with tax fraud?
Yes and no. What I am finding, and where I think you are 100% right, is that the government is using the enforcement of tax laws in cases where it's the only thing available to them for whatever reason. And in cases where a reputed organized crime individual has amassed substantial wealth, the IRS, maybe not being able to make a case for the underlying criminal activities, will do a net worth, will look at the way the person lives, recognize a lifestyle that is well beyond their means based on the information they provide in their returns, and conclude from that that there's a substantial cash income that's being not reported.
Jerry, help us. When you're filling out your tax return, what is maybe exaggeration, or whether the dinner was with a client, or the client really it didn't turn out to be a client, something of that. When is it just paying money back to the IRS with a penalty and perhaps interest, and when does it go where they're locking you up and putting you in jail?
I would say, as a general rule, they are not going to make a criminal case based on overstated items on the tax return, overstated deductions. In other words, if you had, let's say, you have rent, and you said my rent was $8,000 and your rent was $7,000, that's not of great interest to the criminal investigation. The criminal investigation's main target is unreported income, not overstated deductions. Now, that's not to say that if you completely fictionalize the deductions, there's going to be no criminal case. But I'm saying from the most taxpayers, if there's a little larceny, they've overstated their medical deduction, they've overstated their charity deduction. It's not like they didn't have a charity deduction, so instead of $2,000, they made it $2,500. That's not going to find its way into a criminal prosecution.
A lot also depends on the amount, and a lot also depends on who the person is. If you are a John Q. Public ordinary citizen and you've overstated a series of deductions, it may never get beyond the field audit, regardless of how egregious your conduct is. If you are a well-known personality, if you are an interesting person in the public eye, sometimes those cases end up as criminal investigations because of who the person is, and the IRS is concerned that the public not feel that if you're rich you don't get prosecuted or investigated. And the other thing that I have seen time and time and time again is that there is a substantial difference in the government's view between tax avoidance and tax evasion. There's no crime when you structure your life consistent with the tax code so that you pay less taxes than the next person who's not as smart or sophisticated as you are. The crime arises when you withhold income, when you do not disclose income, or when, as Jerry just said, you fictionalize items that have no relevance to the reality and no basis in truth.
Jerry, is there like computer runs or computer programs that if a return indicates something, it's kicked out for perhaps special looking?
Certainly. The service, in an attempt to determine who they should audit, even at the first level of an audit, are going to have comparisons. For instance, bakers, all bakers. We know bakers who report, let's say, $100,000. The norm is that their business deductions against that $100,000 is $50,000.
Right.
If they're starting to, if the computer is looking at bakers, for instance, and they find a baker whose gross income is $100,000 and his expenses are $95,000, that return is going to be flagged. Now, that doesn't mean he's going to be audited, because remember, a computer is just matching numbers. He may have put a note on the return that says additional expenses this year due to flour shortage and
fire loss,
right, or something. So
non-recoverable.
So a human being is then going to look at the return and determine, now, yes, the computer has said this doesn't match the norm, but hey, here's a circumstance that takes care of it.
So in other words, if you're doing something within the norm of your particular industry or something, then you're okay. It's when you do something extraordinary. What have you found, Ben, as far as what's kicked out?
That's accurate, but I've also found that certain industries from time to time get targeted for review, and that there would be a substantial increase, for example, in recent years, of the number of lawyers' tax returns that get kicked out, because from time to time they do a review, and they find, however ironic it may seem, that lawyers are notoriously late. I've represented a lot of lawyers who are brilliant litigators, but they are so wrapped up in their work they never get around to filing their tax returns on time. So we've had an increase in the last year of industries being targeted. Sometimes it's the restaurant industry, sometimes it's the entertainment industry.
Let's discuss that. What happens if you don't file?
Well, the first, as Ben said, sometimes we target attorneys. So let's assume that an enterprising agent gets the list from Martindale-Hubbell, the Bible of attorneys, of all the attorneys in the Bronx.
Right.
They may do a run just to see that they all file, all these supposed attorneys.
I mean, if I don't file 1 year, do I go to jail? If
No.
I don't no.
No.
What happens?
Well, I wouldn't say no, that's it.
If you call me, you don't go to jail.
You heard it here.
The government in criminal cases like to show that it's not just a mistake.
Okay, we'll have to go right after the break. You'll tell us what happens if you don't file. You're watching Lawline. I'm Alan Schnorman. Stay with us. Hello, I'm Alan Schnorman, the host of Lawline, and I want to give you some important information about your legal rights. If you were seriously injured in an automobile, a fall down, or construction accident, you may be entitled to a substantial money award for your pain and suffering. It is important to speak to a knowledgeable attorney in that field. At my firm, Solomon & Schnorman, our practice is limited to personal injury law. We fight for the rights of accident victims. Don't try to evaluate the case yourself. If you have any questions about your accident, call us at 1-800-LAWLINE. If you're too injured to come to our office, we will come to you. The consultation is free, and we only get paid when your case is settled or won. Remember, the insurance companies have lawyers protecting their interests, and so should you. Hello, you're watching Lawline. Today we're talking about criminal tax fraud. Everybody should watch the show. With us is Jerry Levy, a former supervisor of the Criminal Investigation Unit of the Internal Revenue Service, and Ben Brofman, a noted criminal defense attorney. Jerry, what happens if you don't file?
Everything has its problem. If you don't file 1 year, your wife was very ill, you were sick, probably nothing's going to happen. The government, in failure to file cases, likes to see a pattern.
Okay.
They want to see that you didn't file.
What happens in 3 years?
Well, and there was substantial unreported income, you're very likely.
I was busy.
Well, that comes down to the weight of the evidence.
I was having terrible emotional problems with my family.
Depends on who you are. Depends on who you are. If you are nobody and you really have had those problems, you can probably cut this off at the pass at an audit level with a conference, with a amendment of your returns and a filing, and so long as you haven't failed to report millions and millions of dollars, chances are you're not going to go to jail. That's almost certain, and chances are you may not even get prosecuted. The problem with the way the system works is it's fact-specific. Who you are, how much money is involved, how egregious is the conduct, and if you get someone into the mix who knows what they're doing, the IRS will listen if you have a legitimate excuse for having failed to do it. If you ignore the problem, eventually it's going to catch up with you.
Jerry, is there a rule of thumb if a man is making $100,000 and he underreports his income by a certain percentage, that usually becomes criminal?
Well, basically the service has minimum amount of not unreported income. It's the tax. If the tax doesn't total at least $10,000 in a 2 or 3 year period, they're not going to make a criminal investigation. And remember, not a criminal investigation doesn't mean you're not going to be
penalized,
held for civil fraud.
Oh.
With the financial penalties.
They take your house away.
No, the financial penalty can be severe. It can run to a very high percentage of the tax.
Then what happens when you're guilty of criminal tax fraud? Penalties.
Well, the frightening part of today's criminal justice system and that federal crimes, which is what we're talking about, tax evasion, are guided by the sentencing guidelines. They are pushed by the numbers. And even if you have no criminal record, if you are a legitimate person, if you get convicted of tax evasion, for example, and it involves a significant violation, you can go to jail for a significant period of time. And the more the money, the more the jail. And absent, you can go to jail for 10 years for tax evasion if it's a tremendous amount of money and if you don't have extraordinary compelling circumstances to justify a downward departure from the guidelines. And the problem that the general public doesn't know about is that the judge's hands are tied with the sentencing guidelines. Even if you're a good person, you may have to go to jail because the book says so and the amount of money involved is the same. That's why I think people really need to wake up and smell the coffee, as they say. Not paying your taxes used to be, so I pay when they find me. Now you can go to jail, and you can go to jail for a long time, and I don't think the people know that.
I think it's excellent that that's happening because we had a situation prior to the sentencing guidelines where for the same crime in Texas, you went to jail for 2 years, and if you committed the crime in the Eastern District of New York, you got a suspended sentence. And I think it has served a purpose to tie the judge's hands by the severity of the crime, by the guidelines.
I don't want to agree. I don't want the program to indicate that I agree with that, because I think judges should still be able to look at the human who's standing before them.
That's a political issue. Jerry, question. As a special agent, did you ever go undercover?
I personally went undercover only like out of 1 or 2 days.
What about the agency?
But we have agents going undercover, deep cover, for years.
Give us examples.
My partner, who I work with now, when he was a special agent, was a golf pro at a specific golf course in the
Right.
United States
And?
to gather information about certain individuals who used that golf course.
We see it
You mean
more
they
and
would
more.
talk? I mean,
Sure, on the links, you know, hey, everybody's a friend. And what if the golf pro is part of the foursome?
is that right?
Now, I mean,
I don't play golf.
there are many instances where it's a necessity in order for the service to get valid information, they use undercover operations.
Here's
There
another
are massive
example.
sting operations underway in the area of financial fraud. I mean, the government invests tons of money in actually setting up businesses for the purposes of encouraging money laundering, encouraging tax evasion, and we see those cases in the jewelry district, we see those cases in the sales tax area, we see those cases in the tax evasion area, and you see them certainly down in the securities area, where just recently the government was shown to have had an undercover operation trying to find people laundering funds and committing crimes. It's not fair in many ways, and it violates, I think, rights.
I would agree with Ben and say that in many of these instances, these are joint investigations of several agencies, Customs, the FBI, and they're all participating. And the undercover agent may come from any one of those agents, depending on the expertise that's needed. If you're going to put somebody to work as an undercover agent in the securities industry, you better have somebody who knows about the securities industry.
Jerry, I've heard where actually special agents have gone so deep undercover where they go out to buy businesses to learn about the cash aspects of businesses that are being sold.
Several years ago, there was a program in which agents, and that wasn't that deep undercover, it was just, you went out and you looked at an ad in the newspaper that said, for sale, grocery store. You go out to the grocery store and you say, I'm interested in purchasing the business. Tell me how much business does it do, what's the gross. Now remember, that worked to some degree, because the problem that the service ran into is people like to blow their horn. They're trying to sell the business, so I wouldn't say it makes $50,000, I'll say it makes $150,000.
Doesn't mean you're stealing. Doesn't mean you're cheating.
All it means is you may be lying to the person.
That's right.
to
So
embellish your business.
I happen to think that many of those programs are not a proper use of government funds for two reasons. One, I think you can make these cases, if they're out there, without going through the orchestration of creating not just opportunities for people to commit crimes, but you have to understand something. When it comes to tax laws, and I represent a lot of people who are very decent people, since they were children, they were taught, either at home or in school or in the media, that it's okay to go up to a certain line. Accountants will tell people, aggressive accounting is what you need. You need to structure your life better. And now they've changed the rules of the game in the middle, and they haven't given the players an opportunity to sit back and say, well, maybe this isn't what I want to do. I've got doctors coming into me who are facing 10 years in jail for crimes that 5 years ago they would receive a penalty of a financial fine. And now the rules have been changed. And I think programs like this, quite frankly, need to be held so that the public is educated about the danger of what they're involved in.
You know, it's an interesting concept. When we were going out and doing this business buying, you would get people who said, oh, no, we'd say, as a normal purchaser, you'd say, can I see your tax returns? Anybody who's going to buy a business wants to see the tax returns of the business.
Makes sense.
And you'd look there and it'd see $100,000 gross income. And the guy said, I don't make $100,000 gross income, I make $300,000 gross income. Now, of course, you never knew if the guy was blowing his horn, but once in a while, a guy would say, hey, and I got a second set of books, and I'll show them to you, and you'll see the additional income. Or he said, on $100,000, do you think I can have a $2.5 million house, and I can have a house in the mountains in Colorado, and I have 3 Mercedes-Benz? You can't do that on $100,000. They go more to convince the possible buyer that they're telling the truth when they say their income is far greater.
Ben, from a criminal investigation standpoint, if a person is living way beyond his reported income, they bring that into court, and is that...
Absolutely. I mean, one of the biggest problems you have as a criminal defense lawyer is you have a client who has, for the last 20 years, lived on unreported income well beyond their means. And sometimes you meet intelligent people who show you a return that has $50,000 on it, and they live a lifestyle that requires them to have at least $500,000 of expendable income every year. And then, unless they have an in-law or a parent who's helping them, or an inheritance or an insurance recovery, we can't find a source for the purchases that is consistent with the time period, and the government can stand up and say, look, we don't know what happened here, but we do know that the person bought a $500,000 home on January 1st, and for the last 5 years he's had $35,000 of income, according to his returns. Those are very difficult problems to overcome. Having said that, tax cases of a criminal nature are difficult for the IRS to make. They take years of investigation, and very few of them actually go to trial. And those that go to trial either go to trial because they're so strong that the government's position is, we're not giving away the courthouse, you got to go to jail, and the taxpayer goes to trial because they have nothing to lose, quite frankly, or they go to trial because the person is so notorious that the government doesn't feel that they can give a fair disposition without creating a public uproar.
Again, that would be Leona Helmsley.
Yeah, in that case, to me, that case represents, in many ways, a miscarriage of justice, if you really think about it. A 70-year-old woman who is a billionaire went to jail for 4 years, when during the period that they were looking at, she paid approximately $90 million in taxes.
Well, now you're talking about her sentence.
But that's part of the mix.
That's the
part of
judge
the mix.
decides, or the guidelines
But
determine how
it's
far you
driven
go.
by the IRS. That case should have been settled in a manner where all of Leona Helmsley's money was used for something constructive. Build an AIDS hospital, build an orphanage, build a homeless shelter. Don't take a woman of that age, who's not a threat to society, and warehouse her for a number of years
Yes,
on a tax crime.
But they wanted to make a point.
But they made a point. You know, the point that's often made in a tax case is exposing the person to the public humiliation when they are on that level. Now, yes, the major deterrent, quite frankly, is jail. And that's an argument that I've often had, and I understand the other side. But two problems with the Leona Helmsley case. I don't think Leona Helmsley gets to the point where she was if she were not Leona Helmsley. And that's an issue, I think, that's worth further discussion. And second, what would be the point of making her the example when you could have really used her money for the public good?
Look, if you're the postman sitting on the jury, and somebody, let's say they reported $100 million, and they paid taxes of $50 million, but they didn't report $3 million.
It's a lot of money to a postman.
Yeah, to a postman, $3 million, and it's a lot of money to America, and it's a lot of money to a citizen.
But see, that's a key to this discussion, what Jerry just said, that the public has to understand. The people who serve on juries in tax fraud cases are generally people who are civil servants, who are blue-collar workers, and they don't make a lot of money.
Quickly, Jerry, what would you like to say to the public regarding tax fraud?
Report your income.
Ben?
Report your income, but if you don't, call me.
Jerry Levy, thank you very much for coming on Lawline one more time. And
You're
Ben
welcome.
Brofman, it's always a pleasure to
Thank
have
you,
you on
Alan.
Lawline. And as always, this is Alan Schnorman, and thank you for watching Lawline.
You have been watching Lawline with your host, New York trial attorney Alan Schnorman. Mr. Schnorman will be back with you next week at the same time. If you have any questions about this week's program, please write to Lawline, 63 Wall Street, New York, New York, 10005, or call area code 212-432-9111. This program was made possible by the law firm of Zalman and Schnorman, whose practice is limited to personal injury and insurance law.